I'm very pleased to report to you our first quarter results for the new financial year 2012-13. Some of the highlights of this particular quarter are reflected in some of these numbers, as in like our net profit having increased to a level of 290.1 crores, which represents an overall increase of 34.3% compared to the previous year. Our overall growth in loans and credit substitutes stands at 32.4%, within which advances have grown by 16.4%. Net interest income has grown by 33% year on year, and non-interest income has grown quite well this quarter by about 74.3%. The main highlight of this quarter is the continuous accretion in our savings account balances, which year on year have grown by 354%, with CASA growing by 71.5% year on year. Overall CASA has improved by almost 5.4% year on year, and sequentially since March 31st, 2012 is improved by 1.3% and now stands at a fairly healthy 16.3%. I'm also pleased to report to you that the board and subsequently the shareholders last Saturday have approved a step up in our dividend to a level of now 40%, which is a 60% improvement from the previous year. And we have also now fulfilled a 3-year track record in dividend payments, which is fairly important for domestic insurance investors because they like to see a track record of 3 years, and very often is part of their investment policy. One other key number this quarter which has crossed a significant milestone is our overall deposits, which have grown to a level of 50,208 crores, having crossed the magic number of 50,000 crores for the first time since inception of the bank. The basic EPS for the quarter was 8.2 rupees, showing a growth of almost 32% compared to the corresponding quarter last year. Shareholder funds are just short of 5,000 crores at a level of 4,978 crores, showing an overall increase of 23.8%, and total capital funds are just a whisker short of 10,000 crores at a level of 9,495 crores, reflecting an increase of 33.9% since last year. As in the past, Yes Bank's ROA has been stable at a level of 1.5%. I'm pleased to report to you that we have been at 1.5% or better for almost now the last 4 years, even during very testing times for the global as well as the domestic economy. Return on equity has inched up further to a number of 24%, also demonstrating very high returns on equity over the last 16 quarters at around 20% or better over the last 4 years, again during fairly difficult times. NIM is stable at 2.8%, so we've been able to preserve margins despite cost pressures, which, as you know, have been in the banking system for quite a while. The cost-to-income ratio of the bank continues to be fairly efficient at a level below 40%, and for this quarter it's at 39.5%, pretty much the same level as March 31st, 2012 quarter. Capital adequacy at 16.5% is reasonably comfortable, with core tier 1 at a level of 9.2%, and if I add the profit for the quarter back, core tier 1 is about 9.7%. Book value has crossed 140 rupees, it's at 140.7 rupees, and gross NPAs, despite all the challenges, economic, socio-political, that we are seeing heightened in our economy, stand at a fairly comfortable level of just 0.28% in terms of absolute amounts, is about 109.5 crores. The net NPA is just about 6 basis points, so 0.06%, and the absolute amount of NPAs is just around 23.7 crores. Overall branches have gone up to 381 with a rollout of 25 new branches in the quarter. I'm sure you will see us cross the magic number of 400 and 500 fairly soon. ATMs have gone up by 387 year on year to an overall ATM infrastructure of now 642, and the number of employees in the bank have increased to 6,183, which represents an increase of 41% in our HR, our human capital base, over the last 12 months. So we are investing seriously, as you can see, in branches, in infrastructure, as in ATMs, and most of all in human resources. We also raised 200 crores of hybrid capital in the June quarter, of which 140 crores was perpetual and 60 crores was upper tier 2 debt. So in aggregate, 200 crores of hybrid capital was also raised in this quarter, ensuring that CapAd is at a reasonable 16.5% level. Besides that, as you can see from the numbers, that despite economic challenges, Yes Bank's performance in the first quarter of the new year, with heightened risks, with all sorts of other challenges in the banking system, is fairly satisfactory. This has been supported by fairly good NII growth and supported as well by fairly good non-interest income growth. If you see, overall productivity enhancements in the bank over the last 9 months, particularly so, are adding to our P&L performance, with fairly modest and controlled growth in our overall balance sheet, in our credit substitutes and loan book, ensuring that we are not adding new risks to our fairly seasoned portfolio, and the increments in our bank are really coming through better retail rollouts, retail contribution, SME contribution, and some of our new leaders who are sitting in the front row right here and who are playing a tremendous role in our retail strategy as we build retail into one of our core businesses by 2015, led by Pralay Mandal, our group president, senior group president, who joined us a couple of months ago from HDFC Bank, Manojit, who's heading our retail banking asset strategy, also ex-HDFC Bank, and Chitra Pandya, who's heading most of our retail liability products, including direct banking, innovation, number of other offerings, cutting-edge offerings, is also from HDFC Bank. And Nikhil Sani, who's one of our veterans, young veterans in the bank, part of the inception team, leading branch banking liabilities from the front. So really the cornerstone of our strategy going forward is to really build retail with great leadership firmly in place and leading from the front. I'm most certain that we will get to 30% of our asset book in retail assets and SME by 2015, in accordance with our version 2 vision and strategy. Equally, I think the management team is convinced that our overall retail liabilities will constitute about 60% of our total liabilities by 2015. In fact, if you see CASA at 16.3 and retail liabilities at 21%, aggregating to just over 37% is now our overall retail liability composition. And this is a very important number because this has increased from 21% 2 years ago